And so you need to understand this to be better prepared for what's coming. The economic mechanism of the crisis remains the same within the general structure of the economy, a fall in private demand and consequently a decrease in GDP. The crisis is systemic. But now today, the contagion is planetary in all sectors of the economy. I repeat, it's a planetary economic model is bankrupt and it's irrelevant. And everyone thinks that today is different. That's what we're told, today is different. But I promise you it's not different. Almost everything we experience today has happened before. Good afternoon, ladies and gentlemen. Thanks so much for joining us tonight, Estulin, and welcome to our weekly Conceptual Intelligence Review. After my last episode that explained the history of money, we had a lot of questions about the economy. So let's dedicate this episode to helping you understand what's at stake as the world faces the worst economic collapse in history. In fact, what's happening today is almost a carbon copy of the Great Depression. And so you need to understand this to be better prepared for what's coming. So I would like to start with the comparison of the Great Depression period and also the current situation. First of all, I want to remind you that the crisis that began in 1929, 1930, 1931, 1932 consisted of three stages. And the first stage was the collapse of the bubble in the stock market, which occurred, as we all know, at the end of October 1929. And it caused panic in the financial sector, which was then small relative to the entire economy. But in general, if we're talking about real productive economy, physical economy that you can touch, not the numbers on a computer screen, nothing really catastrophic happened, which at that time was 80% of GDP, physical economy. Now, on the other hand, today, the financial speculative sector makes up 75% of the market, and industry, the physical economy that produces things, only 25%. Again, in the 1920 to the 1930 period, industry was 80% of the economy, and speculative economy was about 20%. Okay, and then from November to March 1930, it seemed that the financial turbulence subsided, and this was the second stage of the crisis. And so the stock market, it went up, everyone relaxed, and it appeared that things went back to normal. But in March 1930, that's when the third stage began, the deflationary shock, which was a sharp drop in aggregate demand. And its economic mechanism was associated with the spontaneous correction of the structural imbalance. In other words, the excess of the household spending over the real income corresponds to the scale of the reproductive contour of the economy of the time. And so as a result of a collapse in the stock market, the value of collateral assets, they fell sharply. And as a consequence, the excess demand credit stimulation mechanism ceased to exist. And I'm talking about the inflationary shock because unlike 1929, today, the Fed is actively printing money on an unimaginable scale. In other words, because what does it mean? So they're printing lots of money. The economic mechanism of the crisis remains the same within the general structure of the economy, a fall in private demand and consequently a decrease in GDP. But it goes according to a different scenario. Instead of eliminating the financial flows that created excess demand, what we have is a reduction in inflation. And also, unlike the situation in 1929, the structural imbalance between household income and expenditure today is not 15% as it was back then. I'm not talking about nominal income, but about the amount of income that households can receive as part of the normal functioning of the economy. Or to say it differently, if we reverse the direction of the money received by households, in other words, we expand the financial flows, then 25% of that money would come from printing machine. And therefore, it's not difficult to calculate the scale of carnage in the upcoming collapse. How much bigger? 1.5 times bigger and worse than what we saw between March 1930 and December 1932. And actually, again, the same crisis that led to the Great Depression. And although Western economists all talk about not knowing what is going to happen, those of us who came from the Soviet Union or from the Soviet school, we know exactly what's going to happen. Expect a 50% drop in GDP over the next 5 years, or 1% per month, as during the Great Depression. Now, many speak of the crisis of 2008 as the most similar crisis today, but there is an important difference between the current crisis and what happened back in 2008. Call it Lehman Brothers subprime collapse, it doesn't matter. Because that crisis was predominantly financial crisis. And so the closing of the cash gap and the crisis of confidence worked very well by expanding the central bank's balance sheet as a lender of last resort. And so the financial crisis has turned into an economic crisis through the collapse of business investments, industrial orders, which finally, through connecting channels, has turned into a collapse in consumer demand. And all of this overlapped with debt overload. That was in 2008. Now, today, the imbalance is more pronounced than it was back in 2008, and the economic damage is incomparably greater. In fact, there is no precedent in modern history for such a radical economic shock. The entire system, global system, is paralyzed. We saw the consequences of that a couple of days ago. And so demand has collapsed to zero in most of the areas where this demand is applied. We could talk about transport, logistics, tourism, hotels, entertainment industry, sports, cultural industry, the restaurant sector, almost all small and medium-sized companies in the world, service sector, but also the production industry as a result of the breakdown and disruption of the supply chain. And so the business sector does not receive cash flow and consequently cannot meet its obligation to creditors, contractors, suppliers, employees, and cannot pay the rent. As a result of that, a company does not fulfill its own obligations, undermines the financial conditions of those to whom it owes money, be it owners, creditors, workers, suppliers, and they in turn cannot fulfill their obligations through the chain reaction, etc., etc. It is called the cascade effect. And in 2008, it was strongly visible in insurance companies, investment companies, industrial sector. But now today, the contagion is planetary in all sectors of the economy. I repeat, the crisis is systemic. It's not a sector. It's a planetary economic model is bankrupt, and it's irrelevant whether the United States government prints 3 billion, 3 trillion, 3 quadrillion, 3 quintillion. It makes no difference. This system cannot be saved. So what do we have? We have demand is in free fall, a supply shock due to an economic collapse, problems with logistics, helicopter money, what is it, 2, 3, 4, 5, 6, whatever it is, $1 trillion. And so already the money supply has unwound at an incredible 8% per year. That's not even counting the effect of the biggest flight in 100 years to cash. But in general, the mechanism of maintaining the real sector from the financial side has been completely destroyed because they're two totally different sectors. That's what Glass-Steagall was all about. You have the financial sector, basically speculative sector, people playing with numbers on a computer screen, and you have the physical economy, productive physical economy that you could touch. And for this reason, it seems to me that the most probable mechanism today is a fairly rapid transition to a real economic crisis according to an inflationary scenario and not to the deflationary, as it happened back in the 1930s. Of course, there may be some kind of event, global thermonuclear war, for example, an asteroid hitting the planet Earth as a kind of a force majeure to be able to write off all these debts and responsibilities for $4 quadrillion. But we can't count on these events. Now, again, what is undeniable, here we are in August 2024 with debts, unfunded liabilities, derivatives, and if you add all of it up, you're looking at about a $3 to $4 quadrillion debt. That's 4 and 15 zeros, in case someone is wondering what that is. It's a sum of money that is absolutely impossible to fathom. But if we are to say that it's 50 times the world GDP, it gives you an idea what the world and the central banks will have to deal with over the next coming years. And what very few people understand, including the so-called experts, is that there will be no recovery at all and no economic reset in the short and medium term.
Unlock hundreds of hours of exclusive content on today's critical economic, geopolitical, and social issues. Enjoy world-class interviews, deep analysis, exclusive workshops, and webinars. Stay informed and educated on topics that matter now more than ever with Daniel Estulin's unparalleled insights.
What we will have is an extremely rapid decline in the world economy, which is just a start, and it will be devastating over the next 12 months. Now, what's going to happen? Right now, they're talking about printing, $3.4 trillion in the next round of the so-called stimulus in the US economy. And if you divide that number by the number of people in the United States, well, you get between $10,000 and $12,000 for every man, every woman and child in the country. That's about $50,000 per family. But families will only get a few crumbs at most. Where does all this money go? Accordingly, well, $50,000 per family. I didn't see that money. It goes to the big corporations run by the billionaires. And these billionaires have been paying each other huge salaries, benefits, bonuses, stock options. And so the stimulus will vastly increase the gap between the very, very rich and the rest of us and give everyone a set of very bad habits as a bonus. And so at the top of this global wealth pyramid, we have the world's, 2,200 billionaires. And if you kind of go back to the post-COVID period in these last 3.5 to 4 years, their fortunes have increased to a staggering 70% by $4.2 trillion. And so these billionaires, their total wealth right now is over $10 trillion. And total global financial wealth has increased nearly 3 times since the 1990s, from 80 trillion to $225 trillion. But this massive accumulation of wealth rests on a chilling debt base. In other words, the world has not created any net wealth. The United States growth since the 1980s, if you take out all the money printed by the government, is 0%. Understand that over the last 45 years, since Ronald Reagan presidency, if you take out of the equation all the money printed by the US government, the actual level of growth in the country is 0%. So what we have is wealth has been artificially inflated by what? By creating credit, printing money in the same magnitude. Yes, it was created by printing $200 billion in the last 20 years. But in real terms, physical wealth, this worthless pieces of paper. Because real terms means measured in the only money that has survived in history, which is gold. Because as currencies crash, we'll most likely see hyperinflation first. And that could temporarily boost asset prices, but in nominal terms, but certainly not in real terms. There will also be an implosion of both the debt bubble, the asset bubbles in stock and bonds and real estate. There's something else I want you to consider, the value of a company. So for example, 150 years ago, valuations were conservative in public companies, which is, price to earnings ratio, were typically less than 10. And today, Amazon has price per earnings ratio above 90, and Tesla, not too long ago, had a staggering 1,100 price per earnings ratio. So on a historical basis, all of the largest companies in the world today are overpriced in price to earnings from 32 to 1,100 points. And this is what happens when the primary economic strategy of all governments, of all central banks in the world, is to create money out of thin air, and then these funds are used to support the stock market. And much of the 150 trillion debt created since the great financial crisis began in the year 2006 has stayed with the banks and has not gone to consumers or industry. In other words, the money has reached an investor and has been invested in asset markets, making the speculative bubble even bigger. Okay, so let's go up a notch and see this conceptually. We have major, potentially terminal problems in the financial system since September 2019. For example, today Dow to gold ratio is 17. In 1980, it was 1. In other words, the Dow was at 850 points and gold cost $850. Now, the target of the ratio is 0.5 point to 1 point, and this means that at today's rate, 17 to 1, Dow to gold, Dow will lose 97% over the next few years, and few people believe that this magnitude of decline is possible. But I want to remind you of something. The Dow itself lost 89% between 1929 and 1932, and that was 25 years before the markets rallied, with a world war in the middle that, needless to say, helped the United States economy more than any other country in the world at the time. And so this time the situation is drastically worse from both the debt point of view, equity point of view, evaluations or overvaluations. And so 95 or 97 point collapse is not unreal. And everyone thinks that today is different. That's what we're told, today is different. But I promise you it's not different. Almost everything we experience today has happened before. So there's absolutely no doubt at all that over the next very few years, great fortunes, billion-dollar fortunes will disappear just like that. We'll have gigantic deflation with banks, insurance companies, pension funds, corporations going bankrupt, plus massive unemployment the world over. And that's the best case scenario, actually. It'll be short, it'll be sharp, but all the real wealth in the world will still exist. The problem is not consumption. The problem is that they're printing money to stimulate consumption because the elite incorrectly think that that is the problem. But you cannot have consumption without production. I can't consume if there's no production. And all the new rules and fake money make production very difficult. But by printing money, what they're doing is they're encouraging people to dissipate capital, either by mortgaging their own future or by consuming the capital that previously generations in the past have created. Now the question is, why will this end badly? Well, central banks have absolutely no tools left to save the economy and save themselves. The rates, what are they going to go to? Zero? Are you going to make them negative again? It means that you have to pay to lend money to a bankrupt borrower. Businesses, large businesses, small businesses, medium-sized businesses, they're going bankrupt. You have thousands of companies in all sectors are going out. Total losses will easily be in the trillions of dollars. Also, bad loans increase as businesses and individuals cannot afford to pay interest or the fees. Last year in the United States, an estimated 100 million loan payments have not been made. Not $100 million, 100 million loan payments. And that's not the whole story. It won't be long before the US debt hits $40 trillion. And I think it's mind-boggling that the United States took more than 2 centuries to actually accumulate its first $1 trillion of debt, a milestone which they reached on October 22nd, 1981. And in those 2 centuries, that's 75,000 days. The United States participated in 2 world wars, fought against the Spanish flu pandemic, dealt with the Great Depression, fought the Cold War against the Soviet Union, fought the Civil War against itself before incurring that first $1 trillion debt. Fast forward to the future, to today, to accumulate this last $1 trillion of debt, the United States took 152 days. That's less than half a year. 75,000 days for the first trillion, 152 days for the last trillion. And even more shocking that it was in September 2017 that the national debt first crossed the 20 trillion milestone. Think about that. So what's the real situation in the United States? The desperate pumping of money by the Fed fueled false prosperity on Main Street and rampant speculation and huge financial bubbles on Wall Street. It also generated, as we said, windfalls for the top 1% billionaires. There's 2,200 billionaires right now. Okay, even as the real wages and living standards drop considerably for the 90% of the Americans. And so America's dangerous economic fragility stems in part from the fact that 80% of households, they have absolutely no rainy day funds, and businesses have piled their balance sheets sky high with debts and artificially extended their supply chains to the 4 corners of the world. And so the 30-year party of this false prosperity achieved as a result of the Soviet collapse is over because the United States lived at the expense of what they destroyed.
Unlock hundreds of hours of exclusive content on today's critical economic, geopolitical, and social issues. Enjoy world-class interviews, deep analysis, exclusive workshops, and webinars. Stay informed and educated on topics that matter now more than ever with Daniel Estulin's unparalleled insights.
So let's try to answer a hypothetical question. What will happen if the United States prints dollars indefinitely? Answer: this printing comes at the cost of the productive, real physical economy. The US dollar is the world's reserve currency for now. And it's precisely because of the financial hegemony of the US dollar that the world will have to bear the consequences of large-scale quantitative easing. In other words, the Federal Reserve will have to buy back all the stocks and bonds with the printed US dollars. What does it mean? It means that this catastrophic global inflation is on the way. Rising commodities prices will soon spread to all commodities around the world, which means what? It will lead to higher asset prices, and the impact of this growth will eventually be felt in the real economy. And as one of the major lenders of the US debt, China is being very vigilant about the impact of printing money in the United States, will do precautions regarding the structure of Chinese foreign exchange rates or reserves. In fact, China is seriously considering the scenario in which the dollar and the US bonds will need to be solved immediately. Why? Because Washington's actions will lead to global inflation and the catastrophic devaluation of the US currency itself. And so the systemic crisis, which we're witnessing right now, it's the worst crisis of the history of mankind, is returning the world to a situation in the late 1920s and the early 1930s. Most people are blissfully ignorant of that. You have to understand we're dealing with the most profound civilizational crisis, and people in the most frightening state of unconsciousness hope that maybe in 2 or 3 or 4 months, everything will be resolved as it always has. Let's go back to watching Olympic Games, and this old world of blissful ignorance will get back before Christmas. And so I've often talked about this anthropological turn to the left. The Bretton Woods business model is collapsing based on infinite expansion on a finite planet. And so what we're seeing today is that the capitalist system cannot survive without transferring all the management functions to the state. In other words, the civil society that the West boasted so much about turned out to be a political and technological fiction of globalists. And so experts, in fact, are saying that the nationalization of the main industries is absolutely inevitable. Now, I'm not sure you know this is called socialism. And so by nationalization is proof that the market cannot redistribute the national product under extreme conditions, which ensures the survival of the people. And so the problem is that in order to carry out this type of change or reformatization, the ruling class itself will have to change. But who is going to do it today? So for example, at the time of the end of the Tsarism in Russia, 1917, there was such a party, as Lenin said, the Bolsheviks. But today there's no such hope of bringing about this change. And you have to realize, if extraordinary mechanisms work during the crisis to strengthen the economy, then no one is going to remove them after the crisis ends, which means that a socialist rift has literally formed within the capitalist system itself. In other words, the current crisis, just like World War I and World War II, will be a catalyst for the transition of society to the next technological paradigm. Understand that the world has changed, and has changed forever. And so the economy died suddenly, just like the Soviet Union died suddenly. You went to bed in one country, you woke up in another. And so the economy is dead all over the world. There's no more safe havens. And so the scale of the decline has not yet been estimated, but it is absolutely certain that the drop of world GDP will be much deeper than what we saw in 2008 crisis. But again, we're talking about the speed of transition from a steady state to a catastrophic state. And this is unprecedented. Hold on to your hats. This is going to be bumpy. I'm Daniel Estulin. Thanks for joining us, and goodbye.